G'day traders, before we get started, I'd really appreciate all the emails and questions that I've received, and I apologize if I haven't gotten back to everybody, but I'm doing my best to do that. If you could take a second and hit the like button for me, it'd be greatly appreciated. If you haven't subscribed, subscribe. I try to update 2-3 times a week with relevant information that will help improve your trading in real time. So again, thank you very much. Let's get started. G'day traders, just a reminder again, Wednesday, June 23rd and Thursday, June 24th, Pepperstone will be hosting a live trading event. I'll provide the link below. Blake Morrow from PipZar will be there. Again, the times are up top, depending on where you're at in the globe. It'll be hosted by Chris Weston. Myself, I'm on at 1900 Australian Eastern Standard Time. And we'll be going through the charts in live time. Obviously, if there's trades, we'll be taking them. For me, depending on how London sets up, that window may be opportunistic for a setup at the end of that 12-candle window. And we'll be looking at the pound. We'll also look at the S&P, probably some cryptos, and we'll be going through that in live time. Also, Leandro Andrada will be on, and on Thursday, Binny Ong will be going through automated trading strategies, and also Thomas Atkinson from FX Evolution. So again, the link will be below. A whole host of different people. Miad Khosravi, hopefully I've pronounced that right, and Chris Weston and Luke Sidards will be going through the charts with all of those individuals, myself included. So today, going through some keys to high performance trading, and again some rehashing some basics, but honing in on the simple concepts. We're going to look at the charts in a minute. I just want to talk briefly about when I was in Adelaide at Penfolds Winery, meeting up with some of the other traders from around Australia, and in my opinion, probably 2 or 3 of the largest traders in Australia. And interesting. Getting together, talking, just a great group of individuals and some fascinating things. But one of the 2 or 3 key characteristics that I found with all of these people, number one, very willing, just open and interested in talking about the markets. No matter what size they were trading, they all had some very significant pitfalls that they overcame, some significant losses to the size of, it's very, very, very significant. And we talked about sort of how each one of us have dealt with that, how they came out of that. No egos whatsoever, like very zero ego, all interested, all different strategies. That was what was fascinating, all different strategies. And in fact, I'll share a funny story. I was sitting at the table. A gentleman to the left of me had been completely discretionary up until about 2 years ago. And at that point, he's gone pretty much 95% EA-driven trading. He's not trading as big, but a little bit more consistent, zero screen time pretty much, and low stress. He's just carving out a little tiny return and building that and growing it with the idea that the model is scalable, and convinced for himself that that was the direction that he needed to head to. And the gentleman on my right has tested over, I believe, 30 million combinations of EAs, algorithms, fully automated strategies, combining almost every type of model that you can think of, including seasonality, timings, levels, everything that you could come up with under the sun. And the gentleman on my left said, we need to talk because I want to go fully algo and all fully automated. And then the funny thing is that the gentleman who's done all the testing and modeling said the only sad part is that the only systems that were making him money were his discretionary trading systems. So really interesting night. But again, zero ego, some serious horror stories about losses. But also the upside of that was how they've come out of that and are trading consistently profitable and size trades. But also very interested in learning more, even though they were already trading at size. and profitable, very interested in sharing their ideas, and no egos. Nobody whatsoever walked around thinking that they knew everything and that they discovered everything and that they were a guru of any sort at all. So very informative, just really enlightening evening. Tonight we're talking about sticking to the process and just the daily high-performance key aspects to trading. Number one, patience. Sticking to the best trade setup. So there's still this mentality amongst a lot of retail traders that they think they need to be trading every move in the market. And there's still a bit of a lack of understanding that there's somebody on the other side of the screen. There's somebody that's creating that chart for you to trade. That is not you moving the candles or the profile, whatever you're trading on. There's an organized design to that market by the large players. And it's important to have a best trade setup playbook. And we're going to go through and look at some examples of back-to-back days where they basically did the same things. And again, coming back to understanding that they need to trap volume in the market and hit stops in order to shift money from one bank account into another. So my 3 rules each and every day are, just like it's so easy when you wait for the best setups that if you've been trading long enough that you trade other garbage out of impatience and impulse, that you get caught into mistakes. You end up doing things that you shouldn't do in a poor quality setup where you're trying to force a trade or holding on to a trade that's not going anywhere, and then you miss the actual trade setup when it does come. So rule number 1 for me is patience, just waiting for the best trade setup and understanding that there's going to be a good trade, whether it's this session today, later today, or in 2 days. As we've seen at the end of the week, we've seen some monsters the last few Fridays, some great trades. So again, no impulse trading, just focusing on the best trade setups. Sticking to the tightest risk management no matter what. Big losses are what blows your account out and your headspace. And I've received so many emails from traders who have either just gotten into trading and they keep blowing up trading accounts. And we're going to be going a bit more in depth in that in the next couple of videos, just about basically the 5 sort of levels of trading. But you blow your account out. But you're also blowing out your headspace, your psychology, your emotional capital, your financial capital, but your psychological capital. And you can only do that so many times before as I talked about over in Adelaide, a few traders shared some very dark stories of some serious depression. They lost major amounts of money very fast. And luckily they were skilled enough to recover that. But the place that can put you into makes you ineffective. You have to constantly remind yourself and be at your best. And we talk about this in the 7-step daily routine for high performance traders. Daily ritual, bulletproofing your mindset, sticking to your game plan, self-awareness, being an observer of your own behavior, self-talk, putting your headspace in a state of performance, not in fear. Your emotional conditioning, all these things require ongoing work. Most traders, all they do is focus on entry and exit. And as much as they know about the market, they never go anywhere because they don't actually do the work on their own personal development in order to be able to perform at that elite level and constantly improving in lifetime in the markets. And number 3, never averaging into a losing trade. All of my blown accounts came from averaging into losing trades. So easy to do, trying to get back to the high water mark, trying to get out of a losing trade, trying to get even after a losing trade. Just all the things that will cause you to enter into emotional, irrational, and impulsive behavior. Paul Tudor Jones had this sign above his desk: losers average losers. That's what will destroy you. That is not running a trading business. That is a gambling business. So daily process. So each day I'm looking at the market. We talk about this with the 3-day setup, but I look at the overall state of the market. If we've had a major blow off in gold over the last week. We've seen some consolidation and some movement, some large range movement on the U.S. majors as well as the cryptocurrencies. Is it a trending type of day? Is it a range bound day? Is it choppy? Is it day one, day two? So we want to be asking these questions. You want to have a plan. So is the volatility changed? Obviously, after COVID hit, we had massive volatility. So, that type of volatility, for me, there's opportunity, but also there's danger. So you have to gauge whether or not that's part of your risk aversion, if it's part of your trading plan. But then, number two, looking at the chart each day, and this is one of the things I look at each and every day. Have they engineered some sort of geometry with, U.S. close, Asia open, Asia London? And when I say that, what I'm looking for is a clearly defined chart, because, we get to level 3 or day 3, we could be in a chop market. So they're chopping it up, they're rebalancing their books, whatever they're doing. But when we look at really well-defined charts, they're preparing to make some decent moves, because they're setting highs and lows up clearly defined, and they're making nice moves. And there's a reason for that. They're allowing now structure to be put in place. And I look for that because those are the ideal types of charts that I want to be trading. Number 3, I want to form my thesis. Is this going to be a sell high opportunity? Could this be a sell high, but maybe only for 50 pips? Or is it a sell high for a continuation of a 200 pip move, as we saw on Friday? Is this possibly a reversal day? We saw a great reversal on the pound yesterday. We'll look at that. And then number 4, what do I need to see for this setup to become actionable? So how does this need to evolve in terms of timings, price action, levels, that I will then, number 5, look to place a trade. And then once that trade is placed, I already know how I'm going to manage that trade. My profit targets are pre-programmed, and depending on, as of like Friday's example, I may leave a runner in there because it looks like they could go down to the low and close there. Or is this just going to be a stop hunt and we could possibly see a reversal because we're already down 1,000 pips from 2 weeks ago? That sort of scenario. Manage the trade, lock in profits, put something in your account, and then review the trade. Now, we're not going to go into actionable review process or anything, but just to gain the process. And then just sort of summarizing that, and your emotional, mental, mindset capacity each and every day when you're taking a trade. Don't let your emotions be fluctuating up and down with your P&L. So if your emotions are fluctuating up and down, you're not trading your plan. Focus on your process, not the individual trade outcome. If you truly have an edge and you are executing that edge as flawlessly as possible, then you know that, generally speaking, on whatever 7 out of 10 trades or 6 out of 10 or 9 out of 10, your edge is going to present and your profitability will be evident over the big picture, over the sample size, larger sample size of trades. There's going to be things that happen each and every trade that are going to vary, and you need to execute that plan as flawlessly as possible, especially the risk management component, because the individual trade outcomes themselves do not reflect the performance of your trading plan. Number 3, know what you're going to do when the market does what it is going to do. You need to be able to always be in control. Paul Tudor Jones said this, you need to always be in control. You need to be an observer of yourself. You need to be within your own headspace and be mindful of your performance in terms of the live time. Are you getting caught into stuff? Or are you sitting there calmly waiting, knowing exactly what you're looking for, like a sniper, when it presents that you will hit that trade? Number 4, know what your plan is each and every day. Okay, there might not be a trade because it may be a day that just you look at it and you're like, you know what, you feel like you want to trade, but you're looking at it and you're like, okay, you know what, step back, recognize that maybe there is no trade that's part of your best trade setup, or it's just going to be a low probability day, or a day that is going to get you into something, not go anywhere, cause you, time and effort and get nothing out of it. So again, know what your best trade setups are, know how they should evolve and build, and how you will action on them. And when they're not there, or when it's the type of day that maybe is just not going to offer a good opportunity in terms of risk reward and actual the mechanics of how the market will trade. And then number 5, how much can I win? How much can I lose? The only 2 things that you can control: your risk on the trade and when you get out. So you're either going to lose, you're going to be break even, or you're going to be taking something off the table. So again, you may have a 200 pip target and it may go 25, and you may be there after 1 hour, it's still only on 25, and you may have to recognize that, okay, I need to cut this trade. So have a plan. Don't get emotional about the trade. Stick to your process. Process. That is the one thing that is going to help you stay in the game, stay consistently profitable, and help you grow your trading business. Just taking a look at the S&P from yesterday and just looking at, again, a simple model. Monday opens up and takes out the previous Friday's low, the low of the week. And we see Asia take traders down over the next 3 to 4 hours before consolidating sideways at double zeros, engulfing at the low of the day. So again, 2 possibilities. Traders may have been waiting for this possible engulfment. So again, timing, 3 hours down, consolidation, engulfment. And if you were not in this trade and you came to trade it, if you were trading the S&P in Europe, London, again, we have that initial burst at the end of that, right at the end of that Asian session. And the first candle takes off, goes back through the high of the day, and continues up into the end of that 3-hour window and extends out before coming back down with 3 pushes into the equities hour open, bear pin hammer, 1 bar stop, break of the high for a continuation of that reversal day. So again, pointing process and timing. I keep talking about the equities hour. We see it even in the Europe London session. First hour, the first candle of the middle hour, and once London opens, takes traders down, and then a reversal inside bar and the explosive move continuation. First hour consolidates, a third push, bear pin hammer down at the New York Open, and then boom, the explosive reversal trade back up. Low of the week, other time frame traders in the market before they put in a peak formation low and reverse. So to me, it doesn't matter what market I'm looking at. When the opportunities are there, it's just still the same thing. High and low of the day, timings, round numbers, engulfments, pin hammers, 1 bar stops, or obviously a 1 ATR somewhere down here. If I'm entering in up here, it's still a 1 bar stop. Somebody asked the other day a good question, what if the market's consolidated and then pulls back inside and the trade is inside? It's still a 1 bar stop. Whatever my entry candle is, if it's an open drive, bear pin hammer, whatever that is, it's a 1 bar stop, because the thesis behind this is that this trade should explode and move quickly. And just taking a look at Bitcoin, and similar to some degree in that we consolidated before continuing the downward move through Friday's low. After Friday went down, went into the close, and went into consolidation. We talk about the second day trade. This is similar to the examples we went through last week. Market breaks down in Asia and continues to move down. It goes into consolidation outside of the 12 candle window before pulling back and giving us a 1, 2, 3 into the open of the Europe London window. Little bull candle. And again, you'll notice the difference between this and the S&P is that the S&P went down to the low of Asia, went into consolidation, locked in the low, came back inside and gave an open drive. The Bitcoin comes down, works the low before stop hunting back above the lower high, and then going vertical to continue that move down. U.S. session jams traders in, but you'll notice major round numbers, double zeros, consolidating volume inside of the double zero box. So just if we draw a little box to highlight that, you'll notice they go outside of it. In the gap time, they hit the lows of the day, they pull it back inside. New York stop hunts to the high on traders that were short, and then they consolidate the volume into the close. And today we've seen a 3-push pattern and possibly the beginning of a reversal day, depending on how they handle that U.S. session high. So just coming back to some basic things, you'll notice New York equity markets open up and take traders into the high before pulling back and going into consolidation. The pound was a great setup yesterday for traders who messaged me. Thank you for sending those screenshots. A fantastic trade setup. They sat on top of the Friday's low. Obviously, Friday blew off into the U.S. session before pulling back in the 25 pip consolidation. Asia took traders down lower before hitting it with 3 pushes and then the big engulfment, locking in that lower rectangle. The London session opens and comes down 1-2 in the explosive reversal on the third candle of the London session, the equity hour. And then you'll notice a bullpen hammer on top of that breakout. So the end of the hour closes with a bullpen hammer and the market accelerates away from here to lock in that lower 25 pip box. Again, trapped volume down low. So this is also a day if traders were using moving averages, whatever, they would have been in this trade. But just coming back to some simple concepts, they dragged everybody down low. 3 pushes, they lock in a smaller pattern within a pattern. Peter Brandt talks about this, sticking to really well-defined geometry. So this is a really clean chart. This is well-defined highs and lows. They've got lower 3 pushes locked in on the previous day's low, round numbers, double zeros, engulfment, and then a bullpen hammer on the breakout at the end of the equities hour, and the market accelerates away, which is exactly what we want to see it do. That's how price should behave in a really good trade setup. Gold, again, gave a very well, clean, defined chart yesterday. We're going to look at some similarities with Friday's chart, but again, we had a capitulation after 3 legs down in the U.S. session on Friday, a gap, which essentially is a bull candle, the consolidation, and then the bullpen candle at the open of the 12 candle window. This market came up 25 before pulling back in the second hour and continuing up for a second leg. Not quite going the full 75, 3 levels of rise, but it was 1 level, 2 levels into the 3rd level before we get our reversal. Now this reversal in the gap time is key. If we look at Friday's chart, you'll notice that the gap time, the market came down to the higher low. So they made a high, we talked about this, they made a high, they made a low. And in the Europe-London window, they stayed in that consolidation, that 25 pip box between 50 and 0. The difference yesterday is they came down and they hit the low of the Asian session. They hit the stops down to that lower quarter below double zeros at 75. And on the smaller time frame, we got a beautiful little W on the 1 minute and a 5-minute engulfment as well. But heading into the Europe-London 12 candle window, this is a 15-minute chart. We'll look at this on the 1 minute. The market explodes back through the high of the day. Similar, except that the stops were hit at the low of the day. And on Friday, the market tried to go lower and it wasn't going lower. 1 push, 2 push, 3 pushes continued the move. The market came down and 1 push, 2 pushes, hit the stops at the low of the day, came up, hit the stops, and then London opens 1-2 engulfment and continues for another 50 plus pips before going into consolidation. So constantly asking yourself which trades are in profit. Well, when they make you chase a trade, at some point they're going to come back and get this guy, whether it's at break even or for a loss. The second leg up, of course, they consolidate. Where's the stop hunt going to go? 1 push, 2 pushes, 3 pushes, right at the open of the U.S. session. A beautiful squeeze on the 1 minute and the 5 minute for an explosive 50 pip move down. And they come back up, and then the equities hour hits it a second time before reversing and taking out the high of the day. Now, another little simple concept to remember. London opens up, and we'll look at this on the 1 minute. Just to paint this picture a little clearer, we'll spread this apart. We'll bring this in. London makes a low of the day, a new low for the London session. They come down and they make a low. They go up and they make a high. London makes a high and a low. The U.S. session opens up, comes down and hits the lows of London. They hit the stops on London. They pull it back inside. The equity hour opens up. The New York markets open up. They hit the low of the day on traders that are long before the equity markets open. 1 push, 2 push, 3 pushes. They hit the stops. 1 push, 2 push, 3 pushes. Engulfment. And they go back and hit the high of the London day. So New York 12 candle window comes down. They hit the stops on the lows of London. They get all the traders that are long in London. They pull it back inside. They work it in 3 pushes before New York opens, the stock market opens. They come down and they hit the stops on traders that are long. They engulf it again. Look at the trap volume. Look at the volume. Sorry, we'll pencil that in. These clusters of volume, they hit the stops, consolidate again, continue the move, and go to the high of the day. So timings, if we scrunch this chart up, again, just process. They go up and make a high, consolidate, roll over, hit the stops. They go back and hit the high. London opens up, they pull back and then hit the high again, consolidate, hit the stops, pull it back inside, hit the stops, and continue back to the high of the day. Print off your best trade setups, traders. Hopefully you got some value from today's session. Focus on your best trade setups. Stick to the stuff that's clearly well-defined, that follows your criteria. Keep your risk management tight. Keep it simple. Stick to the process. Have a great trading session. See you on Wednesday night, and may the markets
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.